Hey, it's Connie from Prosperity Finance. Happy New Year. I hope you had a good holiday. I certainly did. Now, in 2020, I was exhausted. I was worked so hard due to the booming housing market. So I took 2 weeks off and recharged myself, spent time with the family and friends. Now I'm ready to go back to work. As the first episode of 2021, I actually want to cover the housing market. A lot of people has asked me, what do you think the 2021 house price is going to be? 2020 was certainly crazy. So today I thought it's a good idea to see what the experts say about 2021. I'm a finance person. I wouldn't claim I'm a property expert. So here I have done my research and put together the economist prediction, and I like to share with you here. So Westpac economists are picking annual house price inflation to a peak of 16% by June this year, and then decline slightly to 12.2% by the end of this year. I think they kind of factor in the LVR rule restatement in March prediction. So it might slow down the market a little bit to 12%. Now, ASP and BNZ all forecast double-digit growth by the end of this year. So they haven't come up with the concrete numbers, but they did say it's more likely to be at double digits. Now, Kiwibank chief economist Gerard was the most conservative one, and he said it's probably around 5 to 6% growth by the end of this year. So as you can see, the numbers are slightly different from one bank to the other. However, the common theme is they're all predicting a growth this year. So what's my pick? I think, it's going to be another growth year. But not at the same pace as 2020. I think that was because most of the people who was looking to buy property already purchased in 2020. And plus, towards the end of 2020, banks has tightened up the LVR rule for investors. So there will be less incentive to buy in 2021. But it's still going to be a strong year. Why is that? I think my opinions is due to three main factors. Number one is the low interest rates. Now, the interest rate has gone down to now we get 2.29% from the main banks. So it's crazy low, right? And it probably likely to be lower this year and even into next year. So when the interest rate is low, for first home buyers, it's made perfect sense to buy a home because the rent expense probably more than the home loan repayments. And plus you are paying your own loan, so you build the equity, so why not? Now for investors, also it's unlikely to be a negative cash flow and it's huge capital growth. So it's no-brainer not to buy, right? So low interest rate definitely is number one factor. Now number two is the housing shortage. Thanks to COVID, that net immigration is almost to zero. But even without the net immigration, housing shortage gap is still there. So there's a still strong demand, okay? And also because COVID, other investment vehicle become less attractive or more dangerous, right? So investing in property make more attractive. So I think these factors kind of the main reasons that why housing market in New Zealand was hot in 2020 and will continue into 2021. Now, but on the other hand, I think there might be some changes that would make the forecast not true. Number one is obviously rising interest rate. The chance of rising interest rate, I think, pretty small. The secondly is a tougher lending rules. Now, in March, we expect the Reserve Bank to reinstate LVR. It depends what that rule is. If it's 30% for investors, I think there's little impact because the bank already, step ahead and they already changed the LVR rule to 70. So you need 30% now to buy investment property. But if Reserve Bank impose 40% deposit, then that might stop some investors from buying, right? So that's to do with a tougher lending rule, especially on the LVR side. Lastly, it could be some new rules in place, such as debt-to-income ratio. What that means is you can only borrow 6 or 7, 8 times of your total income. So that make borrowing capacity significantly reduced. So if that become reality, then yes, it will definitely change the forecast. Okay, so the next part of this video, I'm going to cover my suggestions. If you are first home buyers, if you're looking to upgrade home, and lastly, if you're looking to buy investment property. So let's start with the first home buyers. Now, I would say get onto property market ladder as soon as possible, because it makes more sense to service your own home loan than paying rent, especially when the low interest rates environment, right? And also, if you keep waiting for your perfect house, then you probably missed out. The housing market is growing, just unbelievable, right? So you will left behind if you keep waiting. And also, if you have limited deposit, let's say you have 10, you can also purchase property, right? But if you keep waiting, then your deposit will potentially less than 10%, and you can't purchase anymore. So get onto property market as soon as possible. Even it's not your perfect house, it doesn't matter. Property is growing in value. You build equity along the way, and you can change your home later on. Okay. Next one is about people who are looking to upgrade home. That's a perfect time to upgrade home, right? Now, what I suggest is engage with your finance broker and accountant as soon as you can, because they will help you to assess if you have to sell your current home or not. Now, if you have to, then sell quicker, because, in the second half, at least, it's more predictable. You can get a good price if you sell now. And if you don't have to sell your home and you intend to keep your current home for long-term investment, then talk to your accountant also and see what is the best tax structure. Because what you don't want is borrow every dollar to purchase your new home, and then your existing home, which is a future rental, have little loans. So that means you have a big profit you have to pay tax on. So that's not ideal. And every year, you probably end up paying a few $1,000s more than if you have a good tax structure. So that's my tip for upgrade home, people. Now, finally, I want to say for investors. So what I want to say is a long-term game. So if you get the fundamental right, then you are unlikely to have a loss in property investment. So what I mean by fundamental is look at the main centers and the good suburbs, because that's where the population growth is. That's where the economy is more robust. So even during the recession time, there's still job available. There's still demand for the property. So make sure you focus on the fundamental. And secondly, is to work out your buying rules and stick to them. So what I mean by buying rule is, your borrowing capacity is mainly constrained by 2 factors. Number one is your deposit plus equity, right? Because bank won't lend you 100% on, single property. You need to have some cash and equity. And so you have a borrowing capacity based on your cash plus equity. And on the other hand, it's a serviceability. That means how much loan can you service based on the total income, your job income, your investment income, etc. And normally, the 2 legs is not equal. So you have one leg is weaker. So it could be the equity side or the income side. So you need to know which is weaker so that you can work on it. So when you buy the next property, make sure you focus on the weaker one. Okay? So work out the buying rule. Don't just buy anything. Focus on your buying rule and stick to it. right? So that's my tips for investors. And finally, I just want to say, please start planning early. Now, a lot of customers come to me and want to get a pre-approval, but when I reviewed the current situation, a lot of times I say, hey, before we do the pre-approval, you need to make changes in here and there, and that takes time. Sometimes it requires another month to fix the current situation. Otherwise, you can't fix in the future. It's going to be too late, or it's stop you from getting a pre-approval. So planning early, don't leave till last minute. And also, once you have a plan in place, please action as quick as possible. I saw people hesitate last year and they miss out. They miss out the opportunity when they can just have 20% deposit to buy investment property, or they miss out to buy a property they really, really like because they just hesitate. If you have any concerns, you need to fix them as soon as possible so you can move on, right? So today I covered the expert prediction about 2021 New Zealand house price prediction, and I analyzed the factors why the housing market was so hot and what can make the forecast different. And finally, I provide some tips in terms of first home buyers, upgrade home, and investment properties. So hopefully these are really helpful for you in 2021. If you have any question, please feel free to get in touch with us, and we are more than happy to help you become more successful. Thank you so much. I will see you next time. Bye-bye.